for some insights and some trends that are driving the market, some of the data that you might want to be looking at. Mish Schneider's with us, Chief Strategist at MarketGauge.com. Mish, good to see you. Glad you're with us. How are you feeling about the market when we see we're really pretty much around 4-month highs? You have a few weeks, 5 weeks left.
Well, yeah, I mean, certainly it's been a great ride since we had that low once again in October. And it's been a lot of fun to buy the things that have great momentum. And happily, we've been able to put our clients in through a lot of our quant models. However, I'm always looking ahead at some of the underpinnings of what could drive the market. At this point now, we're looking into 2024. And there's a couple of things that I think we need to be aware of.
So I'd like to hear that, because I know you have a bunch of stock picks for us, but it sounds like you maybe have a little element of warning.
Well, the idea of inflation. I saw a chart about a month ago, and it just blew my mind. It was an overlay of where CPI was in the 70s, from 1966 to 1982, with the overlay of what's happened in 2020 since. And what was amazing is that it was almost a mirror image of the peak in 2022 of CPI and the peak that we saw in 1974, 75. And then in that era, things came down. They came crashing down. CPI went all the way back down to 2%. And so as we're seeing these inflation numbers come down here, it's creating this level of complacency. But then, as we know what happened, there was a couple of missteps, not only in terms of monetary policy back then, but then we had another oil explosion, and that's when inflation started going berserk. And then, of course, we peaked in 1980 until Volcker came on the scene. So it makes you question, could we see that again? So besides the speculation in what could happen with oil, and everybody got so negative, right? So meanwhile, oil is creeping back up. Gets to $80 a barrel, that could be another warning sign that oil is ready to explode. But even if we put that aside, there are two areas I think that are really important to watch. One is money supply, which is the amount of money that we have circulating. It's been way down because of the rise in interest rates. And the other is the government debt and the government spending, because at some point that debt has to be paid off. You can't just keep kicking the can down the road. And if the Fed has to actually do any kind of borrowing in order to pay off that debt, as foreign countries aren't as interested anymore, that too can be inflationary. So rising of money supply and paying off debt to create more money in the system, these two things are something we need to keep an eye on.
Right. Can we get some of the names that you have here? Because you have a slew, you have 6, 7 names. I'm curious, is there a theme here? I mean, because I see gold, Bumble, Wayfair, Coty. How do you go about picking what you're picking? Right.
So, now you're going to the other side of my brain. So I have, the side of my brain that gets concerned and very much interested still in commodities, hence the gold, because gold is not only just a commodity play, but obviously it's been a safety play. And with all of this euphoria we're seeing, gold's at 2040, takes out 2080, I still can see a parabolic move there. But I also am looking ahead at what could thrive even if things do not necessarily go as well for the Fed and we go for recessionary and they have to cut back, et cetera. And that would be, I think we still have to look at solar. I didn't include that in this. I think solar can make a comeback for the environment. I think fashion, beauty, media, dating, and also healthcare and biotechnology, and that's where those picks come from. So like Vaxcyte, for example, PCPX, that's more of a momentum stock. I really like still Coty. That's something I know you and I talked about a while ago. I think that's been basing out forever. I'm looking at Bumble, and I know that's kind of a weird stock because it's been so beat up. But I think, and I heard you mention earlier about the trend towards more marriages. I heard this whole broadcast where people who are wedding planners are booked out for 2 years. I think people might come out of the loneliness and go more back into dating. Could certainly be healthy. And so, those are kind of the areas that I have been really watching here, as well as the commodities, of course.
Yeah. As you talk about that, obviously that would be good news for the wedding planners or whoever's getting married. I saw that millennials are more into buying houses and things like that. So there are certain things that can move things along. A name like Wayfair, Well, how much room to the upside do you think a name like Wayfair has?
Well, right now it's had a pretty substantial breakout. So I think, I could see, especially since, it's a discount retailer and it's still a consumer discretionary, though not a consumer staple. I think if things hold up here, I mean, obviously, the consumer starts to fall down, and you saw GDP. Consumer was a big part of that GDP today, and that's why it's so important. I would like to see, if we step back from Wayfair and look at XRT, which is the ETF, it's sitting so under resistance here. If that pops up through the 65 level and starts to show expansion, which would be a nice broad spectrum of discretionary and staples, Wayfair could go up too. And then we can see a nice 10 to 20% move higher potentially.
And then, Cody, we talked a little bit about. How about eHealth, EHTH?
Well, this is me and my contrarian self, right? So, obviously the deal that was announced today that you were talking about before with Cigna is important. We know healthcare costs are rising. And so the whole idea of eHealth, and it went totally out of favor. It was a Kathy Wood favorite years ago. And I've started watching it again because it's trying so hard to base. It hasn't done it yet. But it's a company you go to shop for the best insurance, health insurance prices. And as that cost goes up, that could come back into favor. When I say jump in today, Nicole, no. But I would be really watching to see if it can get over like $8.50. And then that would tell me we have a good substantial base for possibly seeing that go up in 2024.
Yeah. And I know you had the DB Agricultural Fund, DBA. We're out of time, but I did want to mention that as well because I thought that was an interesting one. Mish Schneider, it's always great to see you at MarketGauge.com. Thank you very much.